HUL numbers. Stock is seeing a sharp dip as we speak, and the results are coming through. So let's have the HUL earnings up on the screen. I think there is volume growth numbers, which we already have. And we have a profit number of about 2,673 crores, which would be about 100. I mean, I think, a miss. And that's the reason why the stock is reacting. There you go. 2,673 crores is the profit. The poll showed us that the profit should have been about 2,800 crores plus. And I think the volume number should be coming up shortly as well. Volume growth numbers from a lever, always important to track. So stocks are down about 3.6 odd percent. And revenues and margins and other things will follow. Mangalam should be with us, helping us in a bit with some of these numbers as we look at it. So let's just stay with this, maybe get a reaction from an analyst as well. But this is essentially the one number that we're sticking with. I think Mangalam is with us. I think we've got revenues at about 17,350 odd crores or so. EBITDA at about 3,950 odd crores as well. So lots of those numbers we will put out. But Mangalam is with us. We can go across to him. Mangalam, take it away.
Well, it so appears that maybe there could be an element of a one-off in the bottom line because the revenue as well as the EBITDA are largely in line with street expectations. So the EBITDA at around 3,950 crores. We were expecting a number of almost 3,981 crores. So that's pretty much in line. Revenue, if anything, is a shade better than street expectations. 17,341 crores compares with our poll of 17,235 crores, which implies that the revenue growth for the company has been closer to around, an 8.5%. The volume growth that has come in, that's at 5%. This is slightly shy of street expectations of 6 to 7%, but really no worries as far as, the reported revenue and the EBITDA is concerned. We'll probably look at details and try and find out whether there is an exceptional element which has caused the net profit to be slightly lower than street expectations, because revenue at 17,341 crores is a growth of over 8%, which is actually one of the highest growths that we've seen for Unilever in the last many quarters. Margins as well at 23%. The street was expecting a number of 23.1%. No real problems out there. Even the volume growth at 5% is a slight miss versus expectations, but nothing to suggest, the kind of deep gash that we're seeing on HUL, the stock price right now. Maybe the street was anticipating a big beat coming in, given the sort of numbers that we've seen from the likes of, Dabur, Godrej Consumer and Marico in their pre-quarterly update, and the street was betting big on the staples pack doing well. But turns out that a slight miss, because at elevated expectations, has the stock lower. But if you just look at these numbers in isolation, the revenue growth is fairly strong. Volumes at 5%, marginally below street expectations of 6 to 7%. And we have margins at 23% as well, which is pretty much in line.
I think we have, Mangalam, stay with us. Sandeep Abhange, research analyst, consumer and mid-caps at LKP Securities is with us. Thanks for joining in, Sandeep. First reactions on the lever numbers?
Yeah, I believe results are quite in line, and it was as expected in terms of the volume growth as well as in the revenue growth as well. So it is one of the highest revenue growth in the past few quarters, and we believe that this is expected to sustain for the next few quarters with the kind of results were expected for almost all across all the staple companies. And the main surprise has come in on the margin side. Margins are also are looking quite stable at 23% approximately. So I believe overall these are inline results, and I expect this kind of volume growth to continue for a few more quarters.
Sandeep, but is the volume growth lower than what some of the other peers, comparable peers, have reported? Would that be a concern? Because the stock is still sliding down 4.5%.
Yeah. So if you see HUL, it has been giving volume growth of close to 2 to 3%. So that was the highest volume growth which they had reported in some of the past few quarters. And considering that, 5% volume growth is quite is better as compared to their own historical numbers are concerned. But as compared to other companies, of course, the product profiles and the categories are quite different. So I believe if you compare it with HUL's own historical performance, this has been a better performance, and it is likely to get sustained over the few quarters as well, considering its size and the overall product categories in which they are presented.
Mangalam, you want to make a point?
Yep, there are a few more details that we have as well, and the internals aren't particularly bad, Prashant. You know, the home care business has actually grown at 14%. The street was working with a number of 12 to 16%. We've had 12% growth coming in for their beauty and wellness segment as well, and there is 7% growth which has come in foods and refreshments. This again, as against expectations of 7 to 8%. The only miss in terms of revenue growth has been personal care, which has grown at 4%. Here the expectations were 6 to 8%. But 3 quarters of their business doing a lot better than expected. In fact, if not in line with expectations, and one leading to a slight miss has caused the volumes to grow at 5% versus 6 to 7% that the street was anticipating. Cannot equate the stock price move right now to just the reported numbers, which are pretty much in line with street expectations. Just a marginal miss on the volumes that have come by.
Yeah.
Okay. I remember, Mangalam, but a couple of quarters back, the company had lowered their margin guidance to focus on volumes because they wanted their volume-led growth. So in that context, a 5% volume growth, as Sandeep was saying, it's better than the company's own historical track record of volume growth, but it's still missing the mark.
Well, you have to be, cognizant of the base as well. Last quarter, the volumes grew by 6%, but that was on a base of flattish volume growth, if not negative volume growth. And this time around, the volume growth is 5% on a base of 4%. So on a compounded basis, mid-single digit volume growth is not particularly bad. Add to that, you have the price growth coming in as well. And with all of this kind of uncertainty that we're seeing in raw material prices, the company's gone ahead and maintained their margin guidance. So all these factors means that they are better positioned now than before. Despite the volatility that we've seen in the raw material prices, they've maintained their margin guidance. Volumes on a 2-year CAGR basis, much better in the first quarter than what it was in the fourth quarter. And the company maintaining their margin guidance only tells you that, they are chasing volumes even after the uncertainty that we're seeing in raw material prices with price hikes coming in. So that's near high single digit, overall sales growth led by price growth.
Okay, thank you very much for that. And on demand, the company is saying FY27 to be better than FY26. And as Mangalam said, the company is holding on to its margin guidance. We will get into a break. We'll come back with more stock-specific action. Stay tuned.